Tuesday, May 6th, a.m. I'm just going to say, curly girls, don't come for me with my hair, okay? It was a busy morning. Okay, what's going on? Okay, so the U.S. market. So the Fed decided not to drop rates, I guess because they're not seeing the inflationary pressure that they thought they would. Okay, so they may do it later in the year. That was a lot of noise, but that didn't pan out or doesn't seem to be panning out. Okay, what's happening with stocks? All right, well, earnings are still coming out. We've got Palantir. They're down 13%. I'm chuckling on the inside. That's all I'll say. Ford Motors down 2%. Why? Well, because they're talking about tariff-related expenses. They're talking $1.5 billion in expected tariff-related costs, and that's not great. So that's why their value is down. Now let's go see what else. Oil and gold. Okay, we've got a fear trade going on here. Brent crude and gold futures have risen 2%. Again, fear trade, inflation trade. We knew that was coming. We know fuel is a whole other story. I did a piece on it. It's not good. So look, bottom line is tariffs are in. They're getting slowly baked in. Companies like Ford, we're going to see more earnings warnings issued. All of this is not surprising. Get ready. The markets are, I would say, they're nervous, but they're not, I don't know, not panicking. It's wait and watch, because we don't know what's going to happen with these policies. We really don't. So equities are down so far today, but I would say this is like a risk off, like reposition, start to game for this a little more. What else we got here? Okay, well, here's my conclusion. So we're late cycle. We're getting ready for the effects of these tariffs. It's mixed corporate guidance. The biggest concern I have, as I've said before, is consumer confidence. Once that's rattled, everything slows down. Geopolitical stress, I'm not saying it's, in and of these things themselves, they're not catastrophic, but together it's kind of a, recessionary soup. It isn't '08. I want to stress that. And really, what does it mean for you? It just means reduce concentration risk, hedge inflation, be smart. Do your plan. Make sure you know what you need. Make sure that your short-term needs are very clearly thought through. Intermediate too, I'd say. But, it doesn't mean any radical changes in what you do if you have a decent plan in place. Hi, I'm Jennifer Kirby from Talisman Wealth Advisors, and I am here to talk about money and financial planning and how to do both better. So if you like what I have to say, please be sure to like, to share, to comment, and to subscribe.